GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we believe everyone deserves a shot at the moon, not just the guys with Bloomberg terminals. I'm your host, Jay Hamilton. It's Friday, March 28th, and we have never seen tailwinds like this before in crypto. It's truly impossible to quantify what I believe is coming in the next 12 months. In today's episode, we are joined by Jason Yanowitz, aka Yano, co-founder and CEO of Blockworks, to break down his 10 most bullish takeaways from DAS, the crypto summit that just happened in New York last week. We're going to talk about Trump, first time a US president, a sitting US president, has attended a crypto conference. I'm not talking about a Bitcoin conference, I'm talking about a crypto conference. We're talking about DeFi, and we're talking about moving money on chain. We're talking about all the stuff that we all want to happen in order for this future and our alts to do well. We're also going to talk about Yano's prediction for regulation and how fast this is going to come is going to blow your mind. And he was talking to senators and congressmen and people who are actually going to be working on the regulation that's happening right now. You guys aren't going to believe his prediction here. And then also we're going to talk about flat out why Yano is buying right now, why he's a buyer and why he is so bullish. This episode is just, you couldn't start your Friday off with a more bullish episode. Let me tell you that. Now, before we jump in, if you guys want to do me a big favor, if you like the show, if you are feeling the vibes, throw down a like, a subscribe, a follow wherever you're listening. If you're really feeling good, give us a 5-star review. I truly appreciate it. Helps the show grow, helps us get more people into crypto in a safe way, which is what we really, really need. Today's episode is brought to you by Definitive Advanced Trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Yano, what's going on, my friend?
What's up, sir? Good to be back.
Great to have you again. Okay, quick, how is DAS, man? Huge congrats.
Yeah,
Sounds
amazing,
like it was
man.
amazing.
Yeah, thank you. So Blockworks launched December of 2017. DAS launched May of 2019. It was the first time we'd ever done a big scale event. The first one was one day, 500 people. And to us, that was crazy, right? We spent, I think, on that event, $300 or $400 or $500,000, which was all the money in our bank account. And we went big with it. And then to do this 6 years later, right? We had 2,500 people, spent multiple millions on the event, rented out Javits Center. We had the president speak. It was kind of a pinch yourself moment. It was really cool.
Incredible, man. Yeah, so impressed with you. And I got to give a shout out to you and your team. Everything that Blockworks is doing for crypto, these are the events that make such a big difference for where we are going and what we're building. So deep bow of respect.
Well, just wait until you see what we do with Permissionless, man, which we got to get you guys involved with that. That's going to be, it's going to be, I think that'll be our best event in history. Actually, it's going to be really good. So,
okay. Yeah. I'll be there. Yeah. I'll be there. And you guys better be there too. We'll get some discount codes and we'll hook everybody up. Okay.
100%.
Takeaways from DAS. You got 10 for us.
Yeah, so I just kind of wrote these 10 takeaways up from the event. It was cool because I think first off, going to an event gives you access to people, right? You can watch the live stream. At one point in time we had 300,000 people on the live stream. So you actually don't really go to events, in my opinion, to learn the content. You can learn on the Milk Road Show, you can learn on podcasts, you can watch the live stream. My takeaway from these events is the most valuable thing by far is the access that you get to people in the hallways and that kind of stuff that you would never get before. So I've got some takeaways just from more private conversations, I think, than the public conversations. But I'll read one tweet actually just to kick this off. It was this guy on Twitter. In all the 6 years of countless events and conferences, DAS New York was something else. It was like a 10x on anything that had come before. The big takeaway is that things are about to massively accelerate. Stables, payments, FX, tokenized equities, everything is coming on chain, and it starts this year. So I've got these 10 takeaways. What do you want me to do? Do you want me to run through all 10? Do you want to do one at a time?
Let's do one at a time. All right. I'm gonna have
okay. My first one is that crypto has real support from the White House, and it's actually more bipartisan than people realize. So if you think back at what was happening on the campaign trail back in 2024, it really felt like crypto became this unfortunately extremely partisan issue. Whereas the Republicans loved crypto, the Dems hated crypto. And everyone went crazy when Trump got elected. Bitcoin, boomed, went up 100% in 60 days. And obviously President Trump spoke at DAS. We also had Republicans, like Tom Emmer, but we also had Democrats as well, folks like Ro Khanna, right? One of the most powerful, I think, up and coming Dems, folks like Wiley Nickel. So one of the takeaways was that, look, Trump is obviously in office, which is very good for crypto. Folks like David Sachs, Bo Hines, amazing for crypto. Tom Emmer, third most powerful Republican, I think you could argue right now, very pro crypto. But we also had folks like Ro Khanna and Wiley Nickel supporting the event. And so one of my first takeaway is crypto has real support from the White House, but it's actually a lot more bipartisan than people realize now that things are moving. And I think the Democrats realize how much money and momentum crypto as an industry actually has.
I mean, it sort of makes sense that once that valve was released, that was sort of holding us back for a long time here. They can anybody can see it. How could you not see it? But it's really I didn't realize that it was that much. It's still from the outside. It still feels like the Dems. I don't know. I mean, I guess you don't hear them
I
as
think
much,
there are
which
the
is
old
great
school
to hear.
Dems and the new Dems, right? The old Dems,
Mhm.
like the Elizabeth Warren crowd, still hates crypto, right? Hates
Yeah.
crypto. But there are these new Dems, right? Richie Torres and Ro Khanna and folks like that. Very, very good for the industry. And it's actually a very important message because you don't want crypto to become partisan because at some point, Dems will get elected. Maybe
Mhm.
it's in 4 years, maybe it's in 8 years, maybe it's in 12 years. I don't know when, but you don't want the first thing that they do to be to shut down crypto. So it's the last thing we want.
uh,
Um,
is now when I should ask about Trump speaking, or is that another takeaway coming later?
I mean, now, yeah, we can talk about it now. I mean, that was a trip. That was yeah.
Huge moment. Huge. First time Trump's ever spoken. Sorry, first time a sitting president has ever spoken at
Yeah,
a
so
crypto
so Trump
conference.
spoke at the Bitcoin conference back in July. So really, David Bailey and the Bitcoin conference definitely paved the way, and I want to give them
Mhm.
a shout out. But yeah, this was the first time in history that a sitting president has ever spoken at a U.S. crypto conference, and it meant a lot. I think for us, it also meant a lot for the industry to have the president showing his direct support. I mean, he opened
Mhm.
the speech and said, I'm here at the Blockworks Digital Asset Summit, and I want to make crypto America the crypto capital of the world. America is going to become a Bitcoin superpower. He talked about Operation Choke Point 2.0, talked about stablecoin legislation, talked about the market structure bill. It was a historic speech.
Yeah, it's not getting his speech isn't getting the attention that a lot of his other speeches get because it didn't have the like big announcement that it's like everybody expects there
Well, the
must
speech
be a
isn't
big
getting,
announcement in
but
every speech that he makes.
I don't think the speech. What was crazy for me is, yeah, to me, I'm like, of course, the speech isn't getting much attention because there's Ukraine war, there's
Mhm.
tariffs, there's which was, I mean, there's so many other things going on in America and in the world right now that, to me, that's why it was so crazy that he spoke at a crypto conference. Because if
Mhm.
there was nothing going on, if he was just campaigning, right, maybe looking for dollars, fundraising,
Yes.
sure, speak at a crypto conference. If the world was very stable and the market was stable and there's no uncertainty, sure, speak at a crypto conference. But the fact that he did this in the midst of all this chaos,
Mhm.
I think is why the speech was so important.
Well said. Well
Yeah.
said.
Maybe this gets into takeaway number two, which is that real legislation is coming. And again, there's public versus private perception. So public perception is probably that I would say, hopefully legislation is coming. Stablecoin bill probably this year. Market structure bill maybe this year, maybe next. That's, I think, public perception if you polled people on Twitter. My takeaway from more private conversations with folks in both the private sector and the public sector is that we will get both of these this year. We will get a stablecoin bill. We will get a market structure bill. I would guess, and this is going to be, I'm an eternal optimist, but I actually think that we'll get stablecoin legislation far before what anyone else in this industry, what I'm seeing on Twitter. I would guess we get stablecoin legislation in the next, I mean, this might seem crazy, and I might want to take back these words later on, but the next like 60 days. We're recording. It's
Wow.
end of March right now, April, May. I think we get stablecoin legislation by the end of May, which I know is going to seem crazy to people, but stablecoin legislation in the next 60 days, and I think the market structure bill will get passed by the August recess. So I think there's a world right? Maybe it's not the highest probability, but I think there's a decent likelihood that we get stable coins and market structure before the fall.
Really? Whoa.
I do. Yeah, I
Whoa.
do. And that's why, look, you look at, this week there were the state of Wyoming launched a stable coin, Custodia launched a stable coin, World Liberty Fi launched a stable coin, Fidelity launched a stable coin. Now, obviously, there's many different types of these stable coins launching. There's the stable coins that act like money, USDC and Tether and things like that. And then there's kind of like just money market funds, but for the marketing, we can call them stable coins. I'd bucket something like Fidelity's into this. But yeah, I think you'll see this onslaught of stable coins. You'll see an onslaught of stable coins. You'll also see an onslaught of the exchanges starting to think about like how to list equities. And I actually have, this kind of gets into, dovetails into another takeaway, but yeah, market structure and stable coins this year.
Damn. It is wild how bullish all of these tailwinds are right now, but yet how, I mean, macro, we're just underwater because of macro.
Macro's driving everything right now, right? So
Yeah.
I got dinner actually Thursday night with actually with Sailor and the folks at Galaxy and some
Dope.
other big traders. There's actually like big sovereign wealth fund from the Middle East there talking about their actually starting to allocate to Bitcoin, which was crazy to hear. And the conclusion in the room was like, we've never had so many tailwinds and sales behind us as an industry, but at the end of the day, macro overpowers everything, and there's extreme uncertainty in the macro markets. But why that makes me so bullish, and I'm buying right now actually, is because uncertainty eventually turns to certainty. Eventually, there's certainty in the world. And so you actually want to be buying when there's times of extreme uncertainty and maybe selling and taking some chips off the table in times of extreme certainty, right? So yeah, I actually, yeah, I'm about as bullish as you can get right now.
I, I couldn't, I
So
love that. I love that quote. Okay, keep
yeah,
going.
maybe moving into takeaway number 3, because this kind of ties into the market structure bill and the stablecoin bill. So one of them is I had dozens of chats actually with the founders and executives of different exchanges, crypto exchanges, fintechs, and brokerages. So the brokerages of the world, like the old school brokerages and the new ones, right? The TD Ameritrades of the world and the Robinhoods of the world. So had the opportunity to speak with a lot of them. There are a few takeaways specifically with exchanges. One, every US exchange is racing right now to offer equities. They want to offer equities on their platform, stocks, equities on the platform by end of 2025. It's not a next year thing. It's not a 2027 thing. It's a this year thing. So US exchanges racing to offer equities. Second is that Asian exchanges are racing to enter or re-enter the United States. All crypto exchanges, both US and Asian exchanges, are sitting on a lot of cash and highly valued equity. So what this is going to drive is they're going to accelerate the two things I mentioned before, right? Asia entering US, US offering equities. They're going to accelerate that with acquisitions, right? Because they're sitting on all this cash and equity. I think fintechs are going to race to offer crypto assets. And I'm not just talking about like Robinhood offering like Bitcoin, Doge, and Solana. I'm talking about offering like the top 100 on CoinMarketCap, the top 200, right? So I think fintechs will race to offer crypto assets. Everybody is thinking about launching a stablecoin. Exchanges, fintechs, brokerages, they're all thinking about launching stablecoins. And then even the traditional brokerages, right? The folks from the 80s and 90s and early 2000s, they are all thinking about how to offer crypto tokens. And now a lot of this assumes the market structure bill goes through, but if it does, I think everything that I just mentioned will happen this year.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on-chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on-chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first 25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield. all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCS USDL is gaining traction at milkroad.com/Coinshift. I'm speechless. This is crazy. This is crazy. I can't believe if you had told me we'd be sitting here even 6 months ago saying that some of this might happen in 2025, I would have told you.
It's a pinch yourself moment for the industry. And maybe this gets into my fourth takeaway, which is crypto Twitter is very cynical by nature right now. And it's important that you don't let crypto Twitter warp your mind. I think there's a lot of FUD, I think is right the word people use, and uncertainty, fear, uncertainty, and doubt on the timeline. And if you're just looking at the timeline, like, I mean, it's pretty easy to get depressed and just down. And what are we all doing here? And actually, there's this guy Tom Dunleavy. I read his tweet. He said, after ETH Denver, it was hard not to question your conviction in crypto for the near term. But after Blockworks DAS, I'm cold messaging everyone I know to start adding as much exposure as they comfortably can. Institutional direct allocation is real, tangible, and happening very quickly. And I'll read you Tom Emmer's quote, right? Congressman Tom Emmer, this is the third most important person in DC, or in third most powerful Republican right now. He said, the feeling in the room at the Digital Asset Summit was an energy we have never seen before. We haven't had this before. And the last one was being at Blockworks DAS feels like a we did it moment. Couldn't be more bullish on where we are and where we're going as an industry. So just like think about those statements in context of how you maybe feel today as you scroll Twitter all day long. It's very important to just like, people joke about touching grass, but like really like step outside, go talk to people in the industry. And if you don't, like maybe just plug back into podcasts or something like that, because crypto Twitter is a very cynical, I would say dark and depressing place right now. And don't let it warp your mind.
And let's be real, very tied to price, and prices are down, and it's been an unusual cycle. We haven't seen an altcoin cycle the way we have in the past, and a lot of people are upset and a lot of people are disappointed. And I mean, we can get into the whole conversations about expectations and assumptions and how they make an ass out of everybody, but you really do need to step away, because the thing I keep saying to everybody is just like, don't give up now. Don't,
right.
Like, now is when I hear, we have a lot of people in our community, I'm sure you guys are the same, where people are like, I'm done, I'm out, I'm so tired of this, right? Don't, not now, please, not now, right? Like, it's coming, everybody, it's coming.
Exactly. So maybe I can get into a few more takeaways here. One is number 5 is 2025. You've been in the industry for a while. Every year it's like, oh, this is the year that we get M&A. This is the year we're finally going to get big M&A in the industry. 2025 is actually the year we will see major crypto M&A. So again, a lot of conversations with folks who are sitting, exchanges sitting on a lot of cash, a lot of equity, some other players too. This is going to be the year we see a lot of M&A happening. I wouldn't be surprised if, we just broke the record, right? So Kraken is acquiring NinjaTrader for $1.5 billion. So largest crypto TradFi acquisition in history. I wouldn't be surprised if Coinbase makes an acquisition that actually surpasses the Kraken NinjaTrader acquisition. I think there's been some.
Because they're already talking about it, right?
Yeah, there's some hints that they're buying Deribit. I wouldn't be surprised if this is in the 2 or 3 or 4 billion dollar range, which would break the record, right, for biggest M&A deal of all time in crypto. And there's other ones, right? Robinhood bought this was last year, but bought Bitstamp for 200 million. MoonPay bought Helio for 175. Chainalysis, Altera for 150. Bitfarms bought Stronghold for 125. MoonPay bought Iron for 100. Stripe bought Bridge for 1.1 billion. So like it is, M&A is real. It is happening. And actually there's downstream impacts, right? This is a great meme. This is hilarious.
I pulled up this meme while you were talking about this. If you guys are watching, this meme perfectly describes everything.
This is it. Yeah, Kraken, Coinbase, and like the game's not going to stop. So you could move Coinbase down into the bottom one and add JP Morgan up top and watch them make a 5 billion. Like I think the game will continue. So everybody is racing, and that gets into maybe takeaway number 6, which is this is the institutions are here. And I maybe can break this into it's a very fluffy term, right? The institutions are here.
Hmm.
It's like, okay, but what does that actually mean? So maybe I can break that into like three different takeaways. The first one is that institutions are actually starting to move into DeFi. And I think this is going to start with private credit. I think private credit, from the conversations, you're starting to see that it's kind of this asset class that a lot of people have realized has unrealized efficiencies, I would say. And it's probably before we move everything on chain, I think you'll start to see two buckets. You'll see private credit. No, or excuse me, the first one that moved on chain was dollars, right, with USDC. The second thing that moves on chain are money market are treasuries, right? So that's the we go from USDC no or cash no yield, treasuries 4%, 5% yield. The next wave of things coming on chain is going to be private credit. So takeaway, I forget what we're on, probably six, is that institutions are here in a big way. One of the big things they're looking at is moving private credit on chain. So that's a really, really, really interesting thing to be looking at, and it's going to happen. It's going to have a big impact on DeFi platforms
Hmm.
like Morpho and Aave and folks like that will be
You
impacted.
know what I'm gonna have to do. I gotta get you to introduce me to the bell curve guys. I gotta get one of them on the show to talk deeper about this because this move for private credit coming on chain is it just feels huge, and I need to wrap my head around it. And I want our audience to understand it because it's a big one on the RWA side that not a lot
Yeah,
of people are talking about.
yeah. Just the easiest thing to like framework for folks who maybe aren't familiar with private credit is you're just pushing a little farther out on the risk spectrum, right? So if cash, there's no risk of cash. So because there's no risk of cash of holding cash, you get 0% interest. Let's say treasuries, right? There's a very, very small amount of risk of treasuries, but it's kind of the risk free rate. So you get like what, 4% or 5%. So then you can move that on chain. When you move it on chain, when you hold the token, you get 4% or 5% for holding the token. Uh, right now, all of that yield is sucked up by someone like Circle and Tether. But those stablecoin fee agreements are all about to get renegotiated. I think more of those fees will actually get passed back to the user. The next thing that happens is a little farther out on the risk spectrum is private credit. So safer than something like an equity oftentimes, but you'll get this like guaranteed 7, 8, 9% a year. So that will pass back to, it'll be kind of split actually between the issuers of the private credit and the holders of the tokens. So
Mhm. And this is what like Sky is really pushing on this
the big one is
with
Sky. Yeah, the big one is
yeah.
Sky. So if you look at Sky, just allocated $1 billion to this. I'm not sure how much of it is public, but I think some part of that is private credit, or maybe that's I don't
Mhm.
know if that's.
We got Rune coming on the show next week,
Oh,
so
great. So talk
I'll
to him
ask
about it.
him
Talk to
directly.
him about private credit coming on
Yeah.
chain. Yeah. Um,
Number 7, I think we're on now.
number seven. Institutions are coming, but the but is it still takes a while for this stuff to happen. So some are testing crypto products to offer to clients. Others are kind of just exploring. Others are experimenting. It is definitely early steps, not a full deep dive. Um, I would say the big concern that is kind of stopping some of these folks from coming on chain is privacy. So most of the conversations I had with some of the big trading firms, some of the big banks, some of the big brokerages is privacy. It's like, look, if I send a transaction on Ethereum or Arbitrum or Solana today or Aptos or whatever it is, can't everyone see that transaction? The answer is yes. So this is where some of the ZK stuff actually goes from like, oh, we're pontificating about how could this be used and why is this useful to okay, we actually need this stuff. Now the good thing is they understand that public blockchains are better than private blockchains, but privacy is still definitely a concern. The other note on this side is like if you think about the flow at which they'll come in, I think it means tradfi trading firms will actually come in like relatively quickly. These are all the big trading firms are going to come in. They want to market make. They want to set up pods and basically trade prop capital. That is a required step for institutional capital. So if the trading firms come in first, second is probably going to be the banks custodying and then later trading the assets, and third, this is farther out. This won't be this year. Is the Wall Street firms actually buying tokens? So it's important to understand like institutions are coming is a phased and measured rollout.
I mean, it feels it feels like we that's what we've been saying for like
Yeah,
5 years
yeah,
now, right? Is how many times have we said institutions are coming? I mean, I'm sure on Empire you've probably done a show that says institutions are coming.
for
I've
sure.
done it
Sure.
myself, right? And so we're used to it being coming in phases. And I think there's a level of patience, but I don't want the butts, Don't give me the butts
We don't
today.
want the butts. We don't
Just
want the butts.
simple, no
All right, so then
butts.
I'll go back. I'll go back. I will. The last note on institutions is this is for the builders. We're talking a lot about investing. For the builders, this is the single best time in history to be building crypto products for institutions. So on the sell side, right, the issuers, the largest financial institutions in the world want to tokenize their own assets, and they're going to need DeFi rails to create real utility, right? Borrow, lend, trading, vaults, all these things are going to explode. On the buy side, right, the investors, crypto native institutions and high net worths and uh, you know more sophisticated retail, right? They're all actively hunting for yields beyond just crypto, especially now that right, like DeFi and funding rates are starting to actually lag treasuries, which is an interesting dynamic. But I think there's going to be like these big moves towards higher yield assets beyond just treasuries, which have traditionally been unavailable to crypto users. And this is where things like non-US treasuries, like private credit, which we were talking about,
Mhm.
becomes really interesting. So if you're a builder and founder and engineer, DeFi infrastructure that can actually support token issuers that can enable things like token gating on the asset and protocol level, on-chain borrow lend facilities, risk engines, all that kind of stuff. It makes building for the institutional crowd finally appealing.
Can I ask a question here? Is um, there's this conversation going around, and maybe this is just a crypto Twitter conversation, so feel free to correct
Uh
me,
oh. Yeah.
which is that uh, that we might end up. There's two paths for crypto, and one would be that the existing financial institutions just they become the front end. They don't really use DeFi. It's just faster settlement and 24/7 markets, but we don't really get the DeFi and the decentralized finance that we all want. The other is that we get the decentralized finance. And there seems to be this belief that institutions aren't so interested in DeFi. Is that accurate?
No, I think they're interested in DeFi. I think they're interested in DeFi. I don't think they'll become the front end. Okay, so maybe I can talk about this with an analogy or an anecdote, which is the internet. Um, there was a time when the internet wasn't like a thing, really, obviously, and then '94 Netscape gets introduced and browsers become accessible. And if you were an engineer or a founder back then, it was kind of like being in crypto today, where it's like, oh my god, like this person's using the internet, or like this person's using the internet. That's so cool. And there was this watershed moment where actually the one of the first institutions to use the internet was the New York Times. They were a right because the internet was for moving information. Crypto, we get excited when the institutions come in because they're moving capital, right? Because crypto is more for capital movement. The internet was more for information movement. So who's one of the biggest information providers in the world is the New York Times. So it was like, oh my God, the New York Times is using the internet. And sure, the New York Times' business definitely got propelled by the internet, and they've done a great job and launched their subscription business and their website and used their mobile app, and they've got the cooking app and all that kind of stuff. And it's all powered by the internet, obviously. However, internet native companies far surpassed on a scale
Mhm.
of 100x bigger than the New York Times, right? Facebooks and Instagrams and WhatsApps and of the world far surpassed, social media obviously way overtook traditional legacy media, but you couldn't have seen that in 1994. So I think when we try to apply that to today with crypto, JP Morgan, Morgan Stanley, all of them, yes, they're going to get into crypto and they're going to tokenize things and they're going to launch real world assets. They'll definitely, all the banks will launch their own stable coins, but they won't do it as well as the crypto native players who understand the market, they understand the users, and they can move much faster.
Great analogy. Okay,
Yeah.
let's keep going.
Last two here. Token investing is changing. So every protocol conversation with funds, at least for me, led to this conversation around token value capture. How is your protocol capturing value from users, and that's like this bad negative word. And but in maybe Web 2 you would call it like, how are you making money? How are you generating revenue and making profits? Very normal thing for a startup to do. And how are you in maybe traditional world? It's how are you driving that value back to the shareholders? In crypto, there's finally this discussion around token value capture. So how are you driving that value back to token holders? So what this means is that fundamental investing, there's like, obviously it's kind of a meme at this point, but like fundamental investing is finally a thing. And in the last administration, any token that showed that they were capturing value or what got in trouble. So you really had to
Yeah.
obfuscate and make it really clear that you weren't capturing value.
No
Now,
utility here. No
no utility here.
utility here.
Now, any token that is not capturing and distributing value under this new administration, they're trying to hide something, in my opinion. They are trying to hide that they are not making any revenue at all because you no longer have the SEC and regulators as an excuse. That excuse doesn't work anymore. So you're going to see uh, a shift, I think, away from governance tokens to tokens that actually accrue value. This isn't going to happen overnight. This will take a while. But what this is actually, so that's the big shift is like away from governance tokens into tokens that capture value. The second thing related to this is that VCs dominated the investing landscape for the last decade. Um, Protocol teams no longer need to, VCs are a dime a dozen. It is very easy to actually go fundraise right now in crypto. The harder group to get in front of that is more important are the liquid fund managers. So there's this new crop of fund managers who are right modular cap and Thea cap, and they're small now, but few years they'll be the big players in the space. They are liquid fund managers, and the protocol teams, if you talk to the founders, they're like, yeah, we have all the VC relationships, that's easy to go talk to them, we can raise in a second. We need to talk to the liquid funds who will buy our token in the liquid market once it's live. So things like investor relations is going to become really important for the first time ever. That's never been a thing, and now it's going to become important. And these liquid funds, they realize now that or they're making the protocols realize they need a business model and they need tokens that accrue value. And this is all just a sign of a liquid funds, tokens that accrue value, investor relations teams, all a sign of a maturing market.
Which is so great for everybody here because it means that we're here for the long term and we're legitimate and we're going places beyond what we ever expected. The thing is, the key takeaway from what you're saying though is you really do need to sit back and really think about your portfolio right now and where your allocations are because
It's
there's a shift.
The allocation of the industry is going to shift drastically. It's going to shift drastically. And maybe the last thing here, the 10th takeaway, the last one is the US is clearly the crypto capital of the world now. The New York City is clearly the crypto capital of the US. That makes New York clearly the crypto capital of the world. And if you listen to President Trump's talk, he said, we're going to make America the undisputed Bitcoin superpower, the crypto capital of the world. And one of the takeaways from Dash was just New York City is pulling everybody in. Protocols, funds, even international VCs are setting up shop. They're getting drawn into deals that are led by American founders on American soil. There are a lot of people getting offices in Soho and Flatiron and Chelsea. I didn't speak with a single person who is not just giga bullish on the US and the future of crypto in the US right now.
Did you predict this when you booked Permissionless in New York this year?
Blockworks took a huge bet on the US, and we basically said this would eventually happen, and we got smashed by that because the whole
Because
industry,
every other conference moved out of the US in the
right?
last year.
Consensus went to Hong Kong and Toronto, right? Consensus was like the tentpole event in the US. They're not hosting an event in the US this year. It's crazy. Token in Singapore, all the events went to Asia. And we just doubled down on the US and bet that, look, this is the most important market in the world. It's going to remain that way. And yes, we're happy. But anyways, you guys should come to Permissionless. It's June 24th through 26th. It's going to be in Brooklyn. Big warehouse vibes. It's going to be epic.
We actually are coming. I don't know if I'm coming, but a bunch of our team is coming,
Good.
and we're planning a meetup.
We'll give you guys, if you guys want like a big code for your community or something.
Yeah,
I love the Milk Road folks.
Let's do it. Let's do it. Blockworks, Milk Road, just that love right there. Okay. really, like, I'm trying to think of how to summarize all of this. 10 takeaways is really difficult to summarize. Uh, Incredibly bullish. It feels like it feels like the pipeline is getting bigger. The flows are going to come in big ways. I think there's the regulation. It's very difficult to quantify the scale of the impacts of all the takeaways that you just discussed. That's the part that I don't think I
Look,
can. It's
I guess what I would
truly
say
bigger.
is like I don't know how to quantify it either. I don't think it's possible to quantify because this industry is about to move exponentially, not linearly. And you can't quantify that because the human brain doesn't know how to think like that. But what I will say anecdotally is, I've been in the industry full time for 8 years now. And for all 8 years, the crypto natives like you and me and Milk Road listeners and people in this retail, right? People on crypto Twitter, we were way more excited than the institutional crowd. Way more excited. We're always trying to tell the institutions why we matter. And now for the first time in history, the institutional crowd is now more excited than the crypto native crowd. And my message to people who've been here for a while is like, this is what we've been trying to do for 8 years and for longer, right? I only got in the industry 8 years ago. People were way longer than me. Don't quit. We're at the last
Yeah.
line. We're at the finish
Yeah.
line. Like,
You
don't give up now.
You know what it feels like? It feels like you went to a bar and the party got going and like the early DJ came on and you were having a good time, and then you kind of died out and you left early because you lost the vibe. But right after you left, if you left right now, like the biggest DJ came in
We
and
got we got like
everybody showed up.
Tiesto, we got
Yeah.
Tiesto and Martin Garrix and
Yeah.
Hardwell are about to
Yeah.
like headline
And
for
Daft
you.
Punk came back and like
Yeah,
made a surprise performance. Like it's
come
just
on.
it's nuts. It's
Yeah.
nuts what's coming. It's yeah. Yeah, no. Man, thanks for starting my Friday off with some serious bullish
Yeah, it's
vibes,
gonna be a
man.
good Friday. It's gonna be a good weekend. Yeah, it's a good time to be in the industry.
I love
It's
it,
actually
man.
never been a better time to be in crypto.
Yes, yes. There's a million shorts from this episode today. I've been writing notes. Yeah, no. Thanks so much for joining us, everybody. We're gonna we'll link to Yano on Twitter so you guys can follow him. We talked a bunch about permissionless. We'll get a code from you, Yano. We'll throw it in the show notes on this one, and we'd love to see any of you guys there if you want to spend some time in New York. Really appreciate. Shout out to you and the whole Blockworks team, Yano. Great job on DAS this year.
Thank you, sir.
Thanks so much for listening to today's episode, y'all. If you want to get access to your gains from your Bitcoin or your ETH without selling it, you might want to take a look at crypto-backed loans. I'm talking about Salt Lending. They've given over $500 million in loans already, zero collateral losses. They have great loan terms. You can get your loan in 24 to 48 hours, no credit checks, permissionless, all on chain. Check the link in the show notes. You won't be disappointed. Thanks so much again for listening, y'all. Have a great weekend. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.